Hello everybody and welcome to a new video update. It's October 11th, 2019, and a lot has happened this week. I've taken a couple of trades. I also want to talk about Brexit, the Brexit situation that's going on, and how that might be coming to a close and how that might affect our trading coming in the coming weeks. And then the last thing I wanted to go over is money management and how important that is for our trading as traders, and some techniques that you can use that I'm using that could potentially turn losing trades into winning trades. Now, money management is typically overlooked, and we are as traders are trying to find the best trading system available online, or trying to build that, but we neglect money management, and it's actually more important than the trading system itself. And I'm going to try to prove that to you with some techniques that I'm using to turn those losing trades into winners. All right, so first let's go over the trades that I've taken so far this week, which are not that many. I've been pretty busy developing this money management strategy and trying to perfect it so I can use it with the system that you're seeing right here. All right, so the first trade that I took was on the pound New Zealand dollar, and had a really good winner here of about 120 pips profit, 123 total, but with spread ended up being about 120. And you can see the big arrow right there was my entry, and the small arrow was my exit. And these arrows are based on the standard indicators that you may know of. I just have them in arrow format so you can actually, so visually, you can see them better, and they also alert me when there's a potential trade. All right, the last one is the Aussie CAD, and my entry right here after the big arrow right there. It went against me a little bit before going back up, ended up closing for just about 5 pips profit, ended up only being about 3 pips with the spread. All right, so Brexit, I'm not going to pull up any diagrams with this. I'm just going to talk real briefly about Brexit and what's going on with that. It's been an off and on thing going on over the last 2 to 3 years, ever since the referendum happened, and it's been a lot of rumors and negativity on the pound of not knowing what's going to happen. But there's been some pretty good rumors now that a deal might be striking soon with the pound, with the UK and the European Union. Now, nothing official, but it's looking like we're headed in that direction, and the pound is reacting to it. And you can see right here, just on the pound US dollar, there's been almost a 500 pip move. And on other pound pairs like the pound yen, the pound New Zealand dollar, there have been almost 1,000 pips. It's been 700 to 800 pips on some of those other pairs. So how do we use this to our benefit? You might be thinking, well, I wish I knew about that, because then I could just buy the pound. And I might be still buying the pound if there are rumors of a deal being struck. That means that the pound is probably going to increase even by next week, another 500 to 1,000 pips. And that could potentially happen. But there's also that potential of a deal just breaking down and not happening as well. We still don't know for sure. And I say that either staying out of trading the pound until we have a better image of what's going to take place with that deal. It's only a couple weeks out. Or scalping potentially on the pound is something that you could do. But maybe the best idea is to just watch the news closely. I recommend a website called forexlive.com. Usually the best way of getting this kind of news the fastest. And waiting for an actual deal to be struck before buying into the pound, or even a deal falling apart, or an official deal falling apart type of situation, and then maybe selling the pound. So be cautious with how you trade the pound in the coming weeks. All right, so right before I talk about money management, and I apologize for any hiccups that this video is giving you. My computer's really slow right now. I'm in between buying a new one soon, so hopefully you can keep up with me, even with some small hiccups with this stream. All right, so what you're looking at right now is the Ripple Forex account that I'm paper trading for the firm out in private equity firm out in Europe, and I've been talking about this in the last couple of months because I've been doing a paper traded account for them. Was just about to sign a contract with them to trade a small $10,000 account, and then gradually grow that to upwards of 500,000. But I had a loss, and you can see right here that the loss took place late last week and ended up being 10%. And 10% is standard. And so what I told them I was going to be, I have a 10% cutoff for the account. Luckily, my algorithm did cut off the trades at 10%, and I've been having a very nice recovery ever since. And you can see just the recovery today at 3.83%, 5.45% for the week. So looking really good, and they're impressed with the recovery that I've made on this account so far. So hopefully I can continue to do that and hopefully sign a deal with them after the account is recovered, which they said is likely to happen. Okay. So what's fascinating about that loss that happened last week was because of the US dollar Canadian, the USD CAD, that was not really having a pullback for me. It wasn't really agreeing with what was going on. Lots of big movements with almost no pullbacks, and caused me to take a loss. But on the WAND account that you see here, the spreads are much lower for the friend I'm trading for. By almost 0.5 pips, which is pretty substantial on all the pairs that I'm trading, and it caused him to take no loss on his account. So no loss happened last week on his account, and I was able to make profit on that actual trade while this account actually ended up. So it shows that how important spread is for scalping. And unfortunately, this Rebel Forex account is not an ECN account. And if it was an ECN account, that loss would have never happened. All right, so moving on to the last part of this video, which is money management. So money management is really important, and it should be the backbone to every system that you're trading. Money management, if you don't know what it is, it's how much risk do you take for every single trade that you put into the market on your trading platform, whether it's indices or metals or stocks or currencies, and it's just anything that you're using, and it's can incorporate grid trading techniques, scalping, martingale techniques as well. So anything that incorporates entering and exiting positions into the market is considered money management, and how much risk you use per trade that you go into. So what I have here is a piece of software that I'm using. It's an algorithm. It's called Trader Agent, and it's something that you can purchase online. I'm not affiliated with them yet. Unfortunately, the software costs $100. And I don't have any discounts as of now, but I'm hoping to maybe get one at some point so I can give you guys a discount if you want to buy the same software. Now, I'm using specific settings that I've been working on off and on for the last year and a half or so to potentially incorporate into a system at some point. And I finally feel like I've got the right settings to incorporate to my Grail system that you see here, that you've been seeing me show you trades of over the last month or so. And so this money management strategy will be incorporated or it will be put into this Grail trading technique here. So I will have a money management technique and a system. And that money management, what I'm going to show you here, is way more important. And the reason why is because I'm using a averaging in type of money management. Now, it's not something new that you haven't heard of before. I'm sure you've heard of it before. It's basically a grid technique. So order one, so this is the first original order, and I was looking for that one to move up. It didn't. And so it actually ended up moving down. And so I need to make sure that if this first order, if I'm not right on this first order, then I need to make sure that that risk on that first order is something that's not too high, so I can potentially enter if the trade goes against me, if it happens to go down. So first order, second order, third order, fourth, fifth, sixth, seventh, eighth, and ninth. So that's 9 trades. You might be thinking that's ridiculous, but I came out with $150 profit and ended up closing all the trades out right at that point. So that is an 85 pip move all the way down, almost 85 pips, and me only needing a bounce or a pullback of about 24 pips in order to close out the entire sequence of 9 trades in profit, nonetheless. So I don't need that much of a recovery or a pullback to turn this losing trade into a winning basket of trades. All right. So this kind of technique can be used with any system. And in this strategy tester, or this test that I'm showing you right here, I'm using a simple indicator called SSRC. basically buy the market when the red line touches the -1 line, and selling when it touches the 1 level here at the top. And you can see here I entered a position once the red line entered here, and ended up having 1, 2, and 3 positions before the market did fall back down, and closing out all my trades at that point for $47 profit. All right, so this account has turned in a $2,000 account starting balance, 2018 September all the way to almost November of 2018. So just about 2 months, turning a $2,000 account into $4,564. So it's roughly just over 100% profit in a 2-month span of time. So this is just an example. I'm using the SSRC to try to see how well this money management technique will work in just using a standard or a very simple system. So if I'm using something a little bit more complex, like my system that you see here, that has a lot more indicators and a lot more involvement, then this money management technique is going to work even better. So I've done about a year's worth of testing with this money management technique to see how well it holds up over time, and it's doing so well. Now, I'm not sure if I'm going to share these settings with anybody yet, but I do recommend experimenting with these kinds of techniques. And if Trader Agent software helps you with that, then I recommend checking it out, getting a demo, or even buying the software. I think you can check it out through a demo, and using some types of grid techniques and money management and martingale strategies to see what works for you. How can you turn a losing trade, like you see here, losing trade, into a winning trade by everything closing out at this point? Trade 1, 2, 3, and 4, and then the market bouncing back up and closing in for a profit. Now that's how we tried, a good way of beating the market, is turning those losing trades into winners. A lot of people may say, well, the way to beat the market is by having a better odds in your system. So if you have 5 trades, you want, and 3 of them are losers of 50 pips, that means that you want your winners to be more like 100 or 200 pips in order to outdo the potential losing trades. So the idea is small stop losses and large take profits. That's never really worked well for me. I know that there's some people that have had success with it. But for me, look into these ideas because they have worked well for my strategies, in particular expert advisors, and try to see what works best with the systems that you're working with right now. Your system or strategy may not be as important, likely not as important as the money management behind it. And if you start getting inventive with looking into how to make losing trades better or break even or potentially come out into profit, that might be a good place to start for becoming a profitable trader. All right, so that's basically all I wanted to cover in this video, is to, when it comes to money management, is look at grid trading, look at martingale techniques. And it doesn't have to be, when it comes to martingale techniques, it doesn't have to be a double up every single time. It doesn't have to be 1, 2, 4, 8, 16, so on and so forth. Look into maybe more conservative martingale techniques, like 1, 2, 3, 4, 5, 6, and so on and so forth. When I'm saying those numbers, I mean that the first position is one lot, second position is 2 lots, third position is 3 lots, fourth position is 4 lots, and so on and so forth, instead of doing a doubling up every single time. Now, a semi-martingale technique might be a much better idea for staying into trades longer, giving you more time to come out and profit on a potential losing trade. All right, so that's pretty much all I wanted to cover in this video. I hope you guys have a great weekend. If you like this video, give me a thumbs up. Hopefully you subscribe, and I'll see you for another video next week. Thanks for watching. See you next time.